AMD stock just hit an all-time high of $267, up over 100% this year. And everyone is asking the same question. Can this continue? Or are we looking at a massive correction that's about to happen? Because here's what's wild, right? AMD's trading at 95 times last year's earnings. That means investors are paying $95 for every dollar that the company made. Now, that could make sense, but only if the growth story keeps holding up. So the question is, can it? Well, AMD just released its third quarter results. Revenue's up 36%, net income's up 61%, and client revenue at a record highs thanks to Ryzen and Radeon sales. And yet, the embedded segment slipped. So while the headlines scream growth, the numbers tell a more complex story, one that Wall Street might be pricing for perfection. And I'm watching something that almost no one's talking about today. The fact that AMD's Q4 guidance, again, doesn't include potential China AI chip sales. If that changes, the upside could be bigger than anyone expects. Hey, what's up? My name is Rick Orford. I've been trading since 1999 and no, I'm not a financial advisor. That is a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. So with all that out of the way, let's dig into AMD, the wins, the warnings, and whether this rally is built to last. AMD, short for Advanced Micro Devices, has built a reputation as one of the most powerful and innovative companies in the semiconductor space. Their technology fuels everything from large-scale data centers to high-performance gaming systems, PCs, and AI applications. Since its founding in 1969, AMD has transformed into a global leader in computing performance, constantly pushing the boundaries of what chips can do. The company operates through 4 major business segments that together form the backbone of this strategy. Its data center division delivers EPYC processors and Instinct AI accelerators, and these power cloud infrastructure and high-performance computing workloads. That is the real engine room where the big clients like Amazon and Microsoft quietly depend on AMD's horsepower. The client segment focuses on desktop and notebooks fueled by Ryzen CPUs, and that includes the latest generation of AI-enabled processors that are designed for, next-level productivity and efficiency. And this is where AMD's AI story really begins. Smart chips that learn and adapt. In gaming, AMD is anchored by its Radeon GPUs and semi-custom silicon, which power top-tier gaming PCs, leading consoles, and emerging cloud platforms. Lastly, the embedded segment supports automotive, healthcare, and industrial applications, and this offers reliable, power-efficient solutions for mission-critical operations. Through these 4 pillars, AMD continues to redefine performance, scalability, and innovation across the computing landscape. In short, AMD isn't just making chips anymore, it's shaping how the modern world runs. Now, beyond its lineup of high-performance processors and graphics technologies, AMD is also growing through software innovation. And leading this effort is ROCm. This is an open source platform that allows developers to fine-tune performance and build advanced AI applications across all sorts of different workloads. By combining powerful hardware with flexible software, AMD can evolve from being a traditional chip maker into a complete computing platform provider. And this will position the company at the forefront of artificial intelligence and high-performance computing. And that's the key transformation, from selling components to owning the entire ecosystem. That's how leaders are made. Of course, we do need to see how the stock's been doing lately because the story only matters if the numbers back it up. AMD stock recently closed at just over $250 with a market cap of around $421 billion. Looking at its valuation, AMD stock currently trades at around 95 times trailing earnings, which means investors are paying about $95 for every $1 the company made last year. And that valuation shows us the market is placing a really strong premium on AMD's future growth potential. And that's driven by optimism around its leadership in AI, gaming, and data center technologies. But it also signals that expectations are already high, possibly leaving AMD room for no error. And that's what I call priced for perfection, because one slip and the whole thing could come tumbling down. Volatility-wise, it has a beta of 1.92, roughly double that of the market. That means the stock tends to move roughly 2 times more than the broader market during price swings. And that creates both greater opportunities for gains, but also higher risks of losses for investors during volatile trading periods. So yeah, it moves fast and not always in the direction you want. The stock also recently recorded an all-time high of $267.08 on October 29th. Year-to-date, the stock is up about 107%, while in the last 52 weeks, it's up around 78%. And that kind of run-up usually means one of two things: either unstoppable momentum or a setup waiting for a pullback. And with AMD stock reaching all-time highs, investors are probably asking themselves what is driving this growth behind the scenes. And it's something that keeps coming up in my Discord. So let's get into the numbers, because momentum without fundamentals is just speculation. And AMD's fundamentals are finally catching up. AMD released its third quarter financials on November 4th, and reported revenue was up 36% to $9.25 billion. Meanwhile, net income was up 61%, translating to an earnings per share of 75 cents a share. Those are not small gains. That's a company firing on all cylinders. AMD's data center business pulled in $4.3 billion in revenue, up 22% from last year, and that was thanks to strong demand for its 5th-generation EPYC processors and, of course, the Instinct MI350 GPUs. The client and gaming division, of course, was the real standout, bringing in $4 billion, up a massive 73% year over year. Client revenue hit $2.8 billion, driven by Ryzen processor sales and a higher-end product mix, while gaming revenue surged 181% to $1.3 billion. On the other hand, the embedded segment brought in $857 million, down 8% from last year, and that shows some softness in the area compared to the company's other fast-growing divisions. So you could say that AMD's core is healthy, but not flawless. That 8% dip might be the canary in the coal mine. Looking ahead, AMD is projecting strong momentum going into the fourth quarter, with revenue expected to grow around 25% at the midpoint, between $9.3 and $9.9 billion. And this guidance reflects steady demand across its data center, client, and gaming segments, supported by its continued adoption of Ryzen, EPYC, and Radeon product lines. And what makes this forecast particularly interesting is that it still doesn't include any potential revenue from its shipments to China. It means AMD's outlook is grounded in its existing business performance rather than speculative contributions potentially from the Chinese market. So they're sandbagging it, right? They're sandbagging expectations. But if China comes online, man, that's going to be all gravy, baby. So that's it for AMD's Q3 financial update. But before I continue, I wanted to ask, if you enjoy videos like this, I've got deep dives coming in every single week. So I say be sure to watch out for them, because they'll make you a sharper investor. So with AMD having a solid third quarter, the only question I have is AMD a buy at these levels? Well, a consensus among 44 analysts rate AMD stock a strong buy with a high target price of $310. That suggests about 24% potential upside from the stock's latest closing price. Over the last 3 months, the average score has gone up to 4.41. And that's not some blind optimism. That's conviction from the pros, but conviction can fade fast if growth slows down. AMD's third quarter results showed strong momentum across all of its core businesses, with both revenue and profit climbing sharply. Growth was driven by robust demand in data center, client, and gaming segments, and that was powered by record Ryzen processor sales and increasing adoption of EPYC and Radeon products. Although the embedded segment softened slightly, overall performance remains solid. Looking ahead, I think AMD expects revenue to continue rising in the next quarter, and it'll be well positioned for further expansion and leadership in the semiconductor industry. In other words, demand's high, execution's tight, and AMD is still setting the pace. So the big question isn't AMD strong, it's how long can it stay ahead? But what do you think? Do you think Team Red or AMD can keep up its strong growth, or is competition going to start catching up soon? Let me know in the comments below. And while you're there, if you found the video helpful, don't forget to hit like and subscribe, because it helps others find the video, it supports the channel, and you won't miss out on any of my future deep dives. Well, that's it for me today in this video. I want to thank you so much for watching, and I'll see you next time.